Morning, this is Al Vickery at AL Waters Capital in Braintree, Massachusetts, and this is your morning call for Tuesday, March 8th, 2011. And we had another slight down day on the Dow yesterday, about 80 points lower, but futures have picked up this morning. Once again, everybody's feeling a little bit more hopeful on the back of some news that we really don't see as all that positive. The nations of OPEC are reportedly meeting to discuss an increase in production. Saudi Arabia has said right from the start that they could easily utilize their excess capacity to fill in the gaps caused by disruptions in Libya, and they are formally meeting to discuss that very fact. The Kuwaiti oil minister confirmed that, but perhaps more telling, he did say no decision has been made to do so just yet. Oil did pull back a little bit later in the day yesterday and this morning, just by a few cents. It is at $105. Gold also did the same after reaching as high as $1,442. It has traded a little bit lower during the night, down to about $14.35, and one might think things are calming down a little bit. Futures indicate maybe about a 50-point upside to start the day on the Dow, and we are, quite frankly, a little bit pessimistic on just how long that trend will last in either direction. And this all boils down to Saudi Arabia, where a so-called Day of Rage is planned for Friday. No telling if smaller protests could, of course, break out at any point. But a formal Day of Rage is planned on Friday. And the difference between Libya and Saudi Arabia is quite simply 2% of global production versus 20% of global production. Saudi Arabia is a key ally and also a key exporter of crude oil. Libya affects Europe much more than the U.S. in terms of its production. Europe does rely on Libya for a good portion of some of its energy needs, but Saudi Arabia is a different story. So over the course of the next couple of days, we certainly expect a lot more volatility in the marketplace. We would not be all that interested in buying into any rally in the equity market at this point. As for oil, being a few cents lower but still well above $100 is very telling. And in fact, reports this morning say that the open interest, or the number of contracts out there for $200 oil in a June delivery, have actually shot way up, which tells you where traders are thinking oil could go should things worsen throughout the Middle East, and particularly in Saudi Arabia. So caution prevails, and we will be watching for probably a short pullback in gold and oil, and then a resumed uptrend before this week is out. Happy trading, and we'll talk to you again soon. Thank you.